Hey everybody, Jeff Dorman, Chief Investment Officer of Arca, back again for That's Our Two Satoshis Live. I'm joined by this guy who needs no introduction, Hassan Bassiri.
Hey, Jeff.
How you doing?
Good. Nice to do this side by side.
I know, back in our new office here in our LA headquarters, actually get to be on the same computer looking at the screen together, so this is nice. All right, Hassan, market was up last week. What do you think?
I was happier.
I think we actually, it's funny you said it. I was about to say, I think we were all happier, but I actually think that's not true. What we were writing about last week was that there is a lot of people who are either short the market right now or just sitting on cash waiting for better opportunities. So it's possible that we might be headed towards one of those hated rallies where everything goes up and a lot of the market is actually upset by it. One of the things we were looking into was all of the sentiment across all markets right now that are offsides. You have record bearish sentiment in the equity market. I think it's a stat that I saw was there's 30% more bears than there are bulls in the equity market, and only twice in the last 30 years has the S&P failed to rally when there's been this much negative sentiment. The bond market is getting crushed. If the year ended today, the absolute return for fixed income investors would be the worst in the last 30 years. That's how much carnage there's been there. And of course, here in digital asset land, right, we've got record high stablecoin balances, meaning tons of stablecoins sitting on exchanges ready to be put back to work. We've got negative funding rates again. Obviously, the fear and greed index bounced a little bit in the last couple of days, but still, hovering near the lows.
Put skew is high.
Yeah, a lot of people short in there. So, what do you think? What do you think makes that change? What do you think leads to that sentiment really reversing here, and no longer this environment where everyone's just sitting on cash waiting or even shorting, thinking that we're going lower?
I think a lot of the things you write about often, where news starts to work again, bullish announcements start to work again, and maybe the inflection point was last week when Wormhole got hacked, and like in that hour, Sol and UST went down, but after that, Sol and ETH went down, but after that, it was a strong bid and bounced pretty hard, and that was maybe the start of the inflection.
Yeah, I agree with that. I mean, well, first of all, you had some positive news today, right? You had Polygon, Matic coming out with a big $450 million ecosystem fund that was funded by who was it? Was it Tiger or was anyway? So it was Sequoia. Sequoia was a big thing there. So and Matic, if I'm not mistaken, Matic outperformed the market today, right?
It did.
So that's good, as you said. So positive news starting to be treated like positive news again, and probably more importantly, what you said is that negative news is no longer being priced by the market. So when you have, there was a run on the bank a week ago with Terra Luna and UST, but UST never broke the peg and Luna never really went lower. You had the Solana wormhole $320 million hack, and Solana's up 20% since then. You had, Sushi having continued internal struggles, but meanwhile the protocol just keeps printing, cash, and it's up 25% from the lows. You've got problems going on with Aave and Maker and Compound with regard to governance, and the market just shrugging that off. So I agree with that. When negative news stops working, you get a positive feedback loop, which is shorts no longer work. Therefore, the shorts have to start covering. They find out that there's not that many offers because anybody who wanted to be a seller already sold for the last 90 days anyway. They have to start chasing. Prices go higher. That leads to FOMO from those people that are sitting in cash. And lo and behold, you get one of those hated rallies that we've been talking about. And we've been here before. I mean, you saw the same thing in April and May of 2020, right? You saw the market completely offsides, everyone looking to short, everyone on cash, and all of a sudden the market just kept going higher. We saw it at the end of 2018. Everybody was negative. ETH was at $80. But each of these instances always had some form of a rallying cry, right? So the rallying cry in May 2021, or rather July 2021, was when FTX and OpenSea came out with huge funding rounds. That was sort of the changing of the guard in terms of sentiment. If you go back to April 2020, it was two things, right? One was the money printing from the Fed, and then the second was the Paul Tudor Jones announcement that he was long Bitcoin.
Right.
You go back to December 2018, it was actually kind of funny. I was looking back at some of our historical write-ups, which I linked to in our blog this week, but you had basically Joe Lubin, Mike Novogratz, and Vitalik all in the same week came out and said, this is ridiculous that ETH is at $80. And it was basically like the Ethereum rallying cry. Right. Who knows? We might look back on this week as being the negative news is no longer negative week, where you can throw anything you want at this market and it's just not going to take it lower.
Right.
So we'll see. I'm in the bullish camp. How are you feeling over the next couple of weeks?
I'm good. I'm happy that we're bouncing, it's sustained, and hopefully looking for it to continue. Obviously, like, I'm not gonna flip to up only forever, but happy that the bounce is real.
Yeah. I still think that for the most part, everybody is still keyed in on economic indicators. And I think there's a couple things that people need to be aware of, right? One is that we have the CPI print coming on Thursday.
Right.
There's been 4 CPI prints in a row that have had markets on edge starting back in October, November. The market's calling for 7.3% year over year inflation. I think it would be really hard for the market to meaningfully sell off on that number, right? The market is anticipating it. A ton of rate hikes are already priced into the market. Not to mention, we're all expecting Wall Street analysts on what the CPI number to be right, even though if you go back last week, there was the jobs number where every single Wall Street analyst out of 78 missed by a long shot in terms of what they thought the jobs report was going to be. So here we are, we're in this beautiful digital asset world, which is supposed to protect us from the government and the business elites. And here we are on pins and needles looking to see what economists think about a couple of numbers coming up. But more importantly, I think the correlation with equities is going to start breaking down. Over the last 3 months, we've seen the NASDAQ and Bitcoin move tick for tick.
Right.
We've seen every other digital asset move tick for tick with Bitcoin. It's slowly starting to break down. Over the last week, we've seen a couple of days where digital assets were up, even when equities were down. And probably even more important is these correlations break down all the time anyway, right? We've been writing about digital assets now for over 4 years. I think I've talked about Bitcoin's relationship with the Chinese yuan and with oil and with rates and with the dollar and now with the NASDAQ. The definition of uncorrelated is that relationships don't hold. And even
Right.
though we are correlated right now, it's only been a couple of months. And chances are in 3 months, we won't even be talking about the NASDAQ again.
Right.
So I'm pretty bullish heading into this week. I'm pretty bullish heading into the next couple of months. And we'll see. All right, next topic real quick. What do you actually think about the Solana bailout?
A cost that had to be borne, quite frankly. Like, I think the Jump has been so heavily invested in the Sol ecosystem. They just bought Wormhole, the dev team, I think a month ago. I don't have the exact date in front of me, but it's basically Jump's bridge now. And FTX was also allowing Sol wrapped ETH to be converted to ETH 1-for-1, indicating that, they know exactly what's going on, but they're indicating that, like, they're going to stand behind the Sol version of the wrapped ETH. And I think it was a great move by Jump, but also, some of these protocols, I hate to use the word, but they're just too big to fail. And I think, Solana definitely falls into that camp with all the money and investment that's gone behind it. And honestly, all the hype that's gone behind it as well.
I'm going to put some numbers behind that. So the term too big to fail obviously stems from the financial crisis of 2008, 2009. You had, massive banks with, multiple tens of trillions of dollars on the line that had a chance of really failing if the government hadn't stepped in. But if you look at the digital asset world, the entire market cap is only $2 trillion, of which, almost half of that is Bitcoin, right? So you're talking about $1 trillion of non-Bitcoin money. And if you look at the equity market caps of some of the bigger companies in this space, from Coinbase with $50 billion market cap, to FTX with a $30 billion market cap, to Binance probably closer to $200 billion, and not even including the Krakens and the Geminis and some of the large private equity and venture funds, you could make an argument that the size of the players in this space are basically the exact same size as the assets of which they make all of their money.
Yeah.
So in my opinion, it's absolutely too big to fail. Like you have entire businesses and parties in this industry that are built upon the continued success of digital assets. There's no way you're going to have a small couple of $100 million hack bury an entire industry. So someone like Jump, who makes a couple $100 million a week trading, of course they're going to plug that hole. And we've seen bailouts before. Bitfinex back in 2019, one of our favorite trades back in 2019. But they had, I think, $800 million basically stolen from them from a local government, and they had to issue the Leo token, $1 billion Leo token, to plug the hole. And what happened? Investors ponied up the money, plugged the hole. Bitfinex was fine.
Right.
Saw the same thing with MakerDAO after March 2020. Right, MakerDAO had a $4 million hole in the protocol. What happened? Issued more Maker tokens, plugged the hole. BlockFi, got in trouble with their Grayscale ARB. What they do? They issued new money to investors. They plugged the hole. So, bailouts happen all the time, and not just in digital assets, right? Bailouts happen in the traditional debt and equity world as well. You've had tons of issues over the last, 20, 30 years. You could even say right now with Amazon potentially buying Peloton, right? That's a form of a bailout with Peloton's earnings going down and Amazon sweeping in. You could even look at BitMEX.
Peloton's a tech company, though, right? Not an exercise company.
They're a tech company, yeah.
Yeah.
Maybe we'll get one in our new office.
Yeah.
You could even go back to BitMEX, right? When they turned off their liquidation engine.
Yeah.
BitMEX basically
bailed out
Bitcoin, right? Yeah. Bitcoin was about to go to zero, and BitMEX turned off their liquidation engine on March 12th of 2020. So bailouts happen all the time, and quite frankly, they should, because they work, right? It gives investors confidence, and that brings more money to the system. So I'm pro bailout. I think we're going to see more of these, and I think I think there is a world where this industry is now too big to fail.
And just anecdotally on Solana, there's been a lot of Sol ecosystem hate coming, somewhat deservedly, somewhat not deservedly, but on crypto Twitter, everyone's talking about how the only people making money in Sol are the VCs and the ecosystem tokens don't go up. So I felt like this buy by Jump to kind of make sure that all the traders on the Sol side were made whole with respect to their ETH. I thought that was just 100% necessary and a good move by them. Cultivated a ton of goodwill. And hopefully, that can change the narrative around some of the Solana ecosystem tokens as well.
Yeah, for sure. I mean, maybe we don't have the Fed put like the equity markets and the debt markets do. Now we have the jump put and the VC put. But look, this is part of a maturation of a market. You start to have real big players with a lot of money on the line, and they're going to fight like hell to make sure that they don't lose their investments and their well-being. So I think I'm not going to call the bottom per se, but I would say we might look back on the first week in February a couple of weeks from now and be like, there were some pretty obvious signals that we were bottoming out.
Right.
All right. We'll see. We'll see how prescient that statement is next week when we come back. So that's it. Thanks for joining us. My friend Hassan Bassiri, you can look him up on Twitter. You can come to our website, ar.ca. Reach out to anyone here at Arca. I'd love to talk about the markets with you.
Thank you.